Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, where we help you understand the closing action on D Street. Well, last half an hour remaining, it's been a volatile one for sure, when we've actually seen the markets also climb above 23,100 on an intraday basis as well. But yet we are back below the 23,000 mark. So we did climb up. It was a steady upward move that we did see from about 11 o'clock onwards, and then in the last 15-20 minutes odd, we've again seen the market slip a bit, now at 22,956. Now, what exactly is contributing to the market at this point in time? In terms of the fall, it's Sun Pharma, L&T, ITC, NTPC and TCS. In terms of the gains, you have HDFC Bank, ICICI Bank, Axis Bank, Bajaj Finance and Reliance Industries among the top contributors on the Nifty right now. The Realty Index has actually picked up a lot of pace, 2.2% higher for the real estate index. Financial services up by 1.8%. Banks have been in thick action since morning, especially the private ones that have been on the move. Even the PSU bank index is up by 1.5%. Autos are driving in a faster lane, 1.2% higher. So you see the banks, you actually see this trend, point out this trend. All the rate sensitive sectors are buzzing. Why? Just like how we were sharing since morning. Yesterday at the night, what we've actually seen is that the RBI has taken some liquidity measures, and this is also to boost liquidity in the banking system that has been facing a lot of cash crunch. This is being seen as a precursor to a rate cut move that could come in as early as the first week of February. On February 7th, the RBI will be meeting, and that's when they will be deciding as to what is the next course of action. So far, there was still a doubt about whether the RBI will move ahead with a rate cut in February or not. But this measure that's been taken last night is probably pointing out to a hint that we are getting that probably the RBI will go ahead and cut that interest rate. And therefore, you see, banks are in fine shape today, financial services are in fine shape today. Now you have the real estate and the auto sectors also buzzing in trade. Now, barring this, when we look at where the downside is, pharma stocks are still reeling under pressure, 2.3% lower. The broader markets still weak. Small caps after yesterday's 4% losses still about 1.8% lower. Consumer durables, IT, oil and gas, mid caps, these are all the pockets that are still reeling under some pressure today. Let's welcome our guest on board to get a better understanding about the markets today. Brijesh Ale, Head and Technical Research and Derivatives Research at IDBI Capital Markets, now joins in. Warm welcome to you, Brijesh. Good to have you with us. First up, you tell us, how are you assessing the market right now? In this volatility, what is the strategy you're adopting?
Good afternoon, Sakshi. So basically what we saw like today, after a very long time, the bank Nifty was something which was showing strength. Basically the HDFC Bank, then the Axis, and to some extent ICICI Bank also. So my understanding is that the bank Nifty is going to see some positive momentum, even though when yesterday there was a good amount of correction, the bank Nifty has seen some strength. So sooner or later, I think this is the expiry week. Some pressure is coming from the corporate's point of view, but then maybe sooner or later we should be crossing this 49,000, 49,500 level on the higher side. So bias will stay slightly positive, mainly a bounce back trade, irrespective of whatever the news we are hearing. And same thing, if you look for the Nifty, previously 23,200 level was the one of the key level where the market was finding support, and then it broke that. Eventually it came up to 22,800 mark, and today it made an attempt to cross almost 23,150, but somehow it has not taken out. But maybe sooner or later, as and when we see a close about 23,100, I think there will be a good amount of short covering in the market, and this should talk about another good bounce in the market. We are just talking of the trading bounce as of now, but then I believe whatever the low what we saw yesterday, 22,800 should be held, should be respected, and we should see some bounce in the market.
All right, we should see some bounce in the market. That's the view that's coming in. सबसे पहले ब्रिजेश फोकस करते हैं बैंकिंग स्पेस पर ही. आज जो लार्ज प्राइवेट सेक्टर बैंक्स में इतना ज़बरदस्त मूव आ रहा है, it started yesterday. I think ICICI Bank's results propped up the stock higher, and then in the evening, like I said, the liquidity boost that's come in, that's lifted the Nifty Bank 1,000 points higher in the intraday trade today, with that 1.5 lakh crore rupees of liquidity boost expected to come in. What's your sense on the banking names? Large private sector banks, ICICI, HDFC, Axis. Where are you keeping your focus?
I think we are more aggressive positive on the HDFC Bank because the level of the 1600 is quite promising. Like it is the very strong demand zone, and maybe not on an immediate basis, but sooner or later, whenever there is a good amount of rally, the HDFC Bank can go back to 1800. So this is a zone for the HDFC Bank. And if you again talk of the ICICI Bank, the results are already done, and now on the after that we are seeing a very strong bounce, and technically it has taken support at the 200 moving average. So definitely HDFC and ICICI is something which we are recommending to the clients, and I believe these are the two stocks which are also the heavyweights in the bank nifty, followed by Kotak Bank. So I think this all the results and everything is done in this space. So the whatever the damage we have wanted to see is already done. So now we will not see the fresh downside in this counter, at least for timing. And post, maybe once we are done with the monthly expiry and we see the budget coming in, I think we should be seeing some bounce.
Okay, got that. So that's as far as the banking names are concerned. Tell us about real estate sector. That's also sharply picked up pace today. There were some signs since yesterday. In case you noticed, Brijesh, stocks like, or last 2 days particularly, landmark properties, Sobha developers, smaller real estate names, they were already buzzing in trade. Today, what you have seen is, along with Sobha, 5% uptick for this one. DLF, there is 3.5% move. There's Godrej Properties with a 3% uptick. Prestige Estates is moving. Macrotech is also buzzing. This has been one of the outperformers of the sector as well. In the real estate, where will you keep your focus today?
So we are having a buy setup. As an index, we are bullish on the realty space, and specifically DLF is something which I am liking because from the technical point of view, there has been a RSA positive divergence. This is one technical indicator which tells me sooner or later DLF can see a good bounce. And followed by that, Godrej Property today is one of the stocks which has picked up with the volume. So it is a trading bounce. I think it can be go back to 2300, 2350 levels. So definitely Godrej Property. And one of the not exactly the risky bet, but the risk reward ratio is quite favorable in Lodha. Lodha, if you see, the levels of 1050, 1060 is a very strong demand zone. So recently the stock corrected, and it has exactly taken support at that point. So I believe these three stocks, whenever the realty space move, this would be the three stocks which would be contributing to that rally.
Got that. Okay, let's again look at some of the other pockets where we can actually see some stocks to spot. Within the broader markets, apart from Sobha that I've marked, Balkrishna Industries is buzzing in the absolute broader markets, Nifty 500 I'm talking about, where the buzz is 5.5% up. Bajaj Housing Finance is up by 5.5%. Cholamandalam Investment is up. South Indian Bank is also buzzing in trade. Then you have stocks like Kirloskar Electric Company that's buzzing. You also have J&K Bank that's buzzing 6.5%, 7%. Again, those banking names will keep coming in front. You also have stocks like Aadhar Housing Finance that's buzzing in trade today. Then you also have stocks like Aztec Life Sciences. You also have Nelcast, Bajaj Healthcare, for instance, is up by 10 odd percent. That's the move that you're seeing. Sri Leathers is also, looking interesting. That's also moving with sharp moves. Very different sectors where some of these names are actually flooding around, Brijesh. Broader markets, what's catching your attention?
I will pick like different stocks to keep a watch on. Somehow, it's purely from the technical point of view. I can see the Muscat dog gaining a quite a good strength. So that is one counter which is catching my eye.
Okay.
Greaves Cotton is something which is again turned very strong from the weekly point of view. Bharti Airtel is something which I think it's again taking support from the demand zone. So whenever the market turns positive, the Bharti can be one where we can keep a watch on. And on a multiple, this thing, JK Cement is one stock which is again moving up. So like whenever like these are the stocks like if for example today somehow the Nifty is now below the 23,000 mark. Whenever this moves about 23,100, I think these are the stocks which are going to see some good amount of momentum. So somebody wants to carry that momentum kind of a trade. So these are the selected stocks where the strength is there, the relative strength is there. I think they will contribute to this some good upside momentum.
Got that. Let's look at what else can we spot. Let's look at the FNO space, Brijesh. Balkrishna Industries is buzzing, Bank of India, RBL Bank, Shree Cement, Cholamandalam Investment Finance. These are some of the pockets that are buzzing. FNO में आपको कहाँ पर अच्छा अभी move दिख रहा है जहाँ पर आप carry on करना चाहेंगे trade?
I think I would concentrate more on the long winters where I can see some good formations, because now we are heading to the expiry, so it will be a bit difficult. But then if you look at the stocks like Prompton News, Cipla, Bajaj Finserv, all the spaces in the Bajaj stocks are looking good. Like Bajaj
Yeah.
Finserv, Bajaj Finance, it is looking good. TVS Motor, the results were out. So I think even structurally, if I look from the charts point of view, it looks good. So maybe there has been a long build-up. If this long build-up sustained, I think this would be the stocks which would continue to see the positive momentum for the next 3-4 days.
Got that. Okay, let's look at some of the other pockets within the markets as well to see where the move is. PSU banks. Let's look at this one. Particularly in the PSU banks, the index is up by 1.5%. But let's look at Bank of India, that's up 5%. Union Bank is up today. Then you also have Punjab National Bank, Indian Bank, Bank of Maharashtra buzzing, Bank of Baroda, State Bank. All of them are in the thick shape. Which stock do you prefer out of all the stocks that are buzzing?
So if I need to see the Union Bank and then the Bank of India. So these are the two stocks which from the technically it has seen a very strong like formation. So if I need to bet on the end of this, then Bank of India and Union Bank should be the two stocks to keep a watch on.
Okay, got that. What else is buzzing in the rate sensitive sectors is the auto space, viewers. We just marked out Balkrishna Industries. So you have the auto ancillary names like Balkrishna, you have others also that are buzzing, but even in the mainstream you have TVS Motor, you have Tata Motors, Ashok Leyland, M&M, Maruti, that's also buzzing in trade. Of course this has been an extremely volatile space to be in also, Brijesh. But what's your sense now? Do you think after losing a lot of ground, these companies have also come off from their high points? Anywhere where you find that the momentum can sustain?
Yeah, definitely. Like the stocks like Tata Motors is almost at a very good buying levels.
Yeah.
I would be very optimistic with the. It will take a good amount of time, but Tata Motors is a very good bet. Then followed by the TVS Motor, which has seen a good recovery. I think beside TVS Motor, one has to keep a watch on the M&M and Maruti. If you see the structure in the daily and weekly time frame, it's forming a very strong formation. And I think this week the trades among the auto is going to be strong. And what somebody wants to take the fresh entry, I still believe there is a opportunity in M&M and Maruti.
Okay, got that. So there you have it. Recommendations coming in from the auto space as well. What else is buzzing? Let's look at the Nifty next 50 names. Okay, apart from the ones that we've already marked out for our viewers, Varun Beverages is coming strongly today, 2.7% higher. You have Indigo that's buzzing 2.7% up in trade. Then you have Info Edge, Zomato also buzzing in trade. These are some of the other pockets that are buzzing in the Nifty next 15 names. Let's ask Zomato, particularly on this stock, Brijesh, 208 currently. Very volatile. It's sharply come off from its all-time highs. We were looking at Zomato trading above 300 odd levels, and that was the time when everybody was going gaga over Zomato. Clearly, let's also pull up Swiggy in the same breath. It will be interesting to look at Swiggy because it's actually slipped below its IPO price also on an intraday level at least. So that also we've seen. In fact, all of this pressure started from Zomato's earnings. Zomato's earnings came in where they highlighted, yes, there is high competition. Yes, we are going to be front loading a lot of our expenses by opening a lot of dark stores. Blinkit may continue to make losses. Those are the points that Zomato pointed out, and that has not just pulled down Zomato stock but also Swiggy stock as well, and Swiggy has also been dragging from that day itself. So look at the kind of move that we've been seeing. Brijesh ji, I know Swiggy you won't have a long-term chart because it's a recently listed stock. What's your suggestion on both Zomato and Swiggy?
See, to start with Zomato, as you said, there has been a correction and we broke the 200-day moving average somewhere close to 240 mark. So for me, it is correcting and it has broken the major averages. So the trend has now turned into bearish. So for me, as long as it doesn't sustain about 240, 245, I won't be taking any positional long bets. Now, what on the downside? So maybe another 5 to 10% odd corrections can be there. I'm not very sure how what would be the downside level, but I would not be taking any long bet until and unless I see a very strong bullish candle close with good numbers. So it is a wait and watch. It looks further downside can be there in case of Zomato. There's a wait kind of a thing. Coming to Swiggy, so again the same Swiggy the same story today in when the market was moving, the Swiggy is still down. The stock is still if you see the candlestick, it is still the bearish candlestick kind of a formation. One thing for Swiggy is likely it has got a very limited chart, but it has come to that demand zone of 400 mark. So I'm not very sure. Some technical bounce back can come, but directionally the stock is still looking weak. So one should avoid. And as you said, 500, like for example, 500 is the level where the 200 moving average is plotted as of now. So it's way far from the current level. So till 500 level is not taken on the Swiggy, the directional trend will not be that strong or maybe that positive. Some trading opportunities can be there with very strict stop loss of 400 levels.
Got that. So that's as far as the quick commerce, the food delivery and the new age tech space is concerned. That's the kind of expectation between Zomato and Swiggy at this point in time. Let's again look at some of the other pockets then. Where can we expect some move right now? Okay, let's look at, interestingly, let's look at the stocks in the downside to see if there is any opportunity there. Pharma about 2.5% lower in trade today, Brijesh. And pharma space has actually been an outperforming one. In 2024, this was the best performing index. Many of the stocks here really came off from a long time consolidation, performed quite well, clocked in higher highs and record moves as well. But what's your expectation now on some of the stocks here today are dragging? So the defensives are now actually not getting that much attraction as they were in the last few days. Your sense on pharma?
So I think the way the stocks like Sun Pharma and other stocks are correcting, so this all being in the F&O space, the positions are not getting, might not get rolled over the way it should have been gone. So I think one should avoid till the monthly expiry is over, and then we can again review it. Maybe further corrections will follow because this is all F&O stocks. The positions will see the call writers will be very aggressive in this kind of stocks. So it is better to avoid for the next 2 to 3 trading session post Thursday, maybe from Friday. Whenever it comes to the further, if there is a further correction, we can keep a watch on it. But then directionally, Sun Pharma would be good. If it comes back to 1600 level, then something can be seen. But now I would like to avoid it at this point.
Got that. Okay, got that. Let's look at some of the other pockets as well. Okay, let's look at one important point that all of our viewers must definitely look at right there. Within the defensive SPAC, let's look at FMCG. Today FMCG is just down 0.4% odd. I'll talk about the larger FMCG trend and the overall outlook from Brijesh in a bit, but I want you to focus on ITC. Let's pull up that stock. Why am I talking about it? ITC Hotels shares will be listing on Wednesday. So that's January 29, that's tomorrow. And therefore, ITC will be in focus tomorrow. In case you're prepping for yourself for tomorrow, this is one stock that you should be looking at as well. The approvals have been made and ITC shareholders will receive 1 share of ITC Hotels for every 10 shares of ITC that they hold. If you had the shares of ITC in your demat accounts back on January 6, then you are eligible. Then tomorrow you will see ITC Hotels, when it gets listed, it will show up in your demat statements and in your accounts as well, that you have got 1 share of ITC Hotels when it gets listed as against 10 shares of ITC that's been held on. So that's something that you should be really looking at. Brijesh ji, ITC, how are you looking at the trend?
Madam, the scenario is not very good. If you see, there has been a distribution. Even today, the stock is down like close to 1%. And somewhere this 400 and 410, the put right, like the uh, sorry, not the put writers, the at 450 the call writers are extremely aggressive. So I believe this will see some further sell off. The positions are getting shifted on the lower side. So I think we might see 415, 410 on the downside. So at least for the next weekend, so I think there will be some selling pressure in the ITC and close to 400, then again the put writers are active. So that can be the possible demand zone. But on an immediate basis, I think some sell-off will be there in the ITC.
Okay, got that. So there you have it. That's the view. Now let's understand the overall FMCG outlook from you, Brijesh ji. Last few days, we've also seen some bounce coming on heavyweight stocks within the FMCG pack, like Britannia, for instance, HUL, for instance, as well. What is your own expectation here? Is this a space that interests you?
If I look from the sector point of view, it is considering sideways, and still there is no any very strong positive bias. So on a sector on its own, I think 56,500 will be the level where it will find see some resistance, and mainly the ITC has got a bigger weightage. If my directional view on the ITC is slightly negative, then I think I need to avoid a bit. Maybe it will take a week time. So once because since we are heading close to the expiry, the most of the thing will be points from the expiry point of view, and the positions are not getting the fresh longs are not getting added in this sector, so it should be avoided, and maybe in a further on a little bit on a downside one can review it.
Okay, got that. So that's the view as far as the FMCG pack is also concerned. Let's look at some of the other pockets. Mid and small caps for you, Brijesh ji. Somewhere where the maximum hit has come in the last few days of a sell-off in the markets. These are the two pockets that have actually lost a lot of ground. 15% lower for the mid-cap index from its all-time high level is what it has come down to. Small caps have lost even further ground, and they are just very, very close to enter a bear market territory. Small cap index is nearly 18% lows from its all time high level. So once it hits that 20% lower, it will be in a bear territory as well. So that's the kind of loss that investors have faced. And Brijesh ji, you know that most of our retail investors have heavy exposure to mid and small cap stocks in their portfolios, and they are the ones that are bleeding the most. How is your approach currently? Are you looking at this as an opportune time? Are you being very cautious at this point in time, or very stock selective? What exactly is your view?
Maybe that stock specific trade might be there because we need to have an individual trade perspective how it would work. But then from the sector point of view, it's making the lower lows formation. So as long as the lower low formation is being made, I think the space on the downside is still there, and there can be a further slight corrections can be there. And the way the Nifty all the way went up to 23,100 and then it has given back. So my I was little bit optimistic and looking for today to be one of the reversal day. But then the way it has moved, it will take a little bit longer time. And as long as its structure doesn't change and it doesn't change from the lower low cycle to the upper high cycle, I think one should be very cautious, and I think selected stocks can be bought that too from the fundamental point of view. The valuations are cheap and it is near the multiple demand zone. Then we might take see on a stock specific bit, but then a sector specific, I think it still looks weak, and then can be further damage can be.
Okay, got that. Let us look at some of the other pockets. You know, Brijesh ji, last 5 minutes to go, 6 minutes to go before the market shut shop, and we are going to be hitting bang in the middle of what is being seen as the budget trading week. Saturday is when the union budget will be presented. So far, there is no budget rally that has actually enthused investors. In the usual favorites, railways, defense, you did talk about Mazagon showing a bounce, but there has not been a very clear on an everyday kind of a direction that we are looking at. Same way for fertilizers and chemicals, the momentum dwindled after a few days. Then for infra stocks, there is again some question as to what will happen. PSU stocks, oil and gas here and there, they are buzzing, but again there is no clear trend because of the overall weakness and sentiments that have been dampened. Ahead of the budget, where will you keep your attention in terms of stocks?
Maybe this time we are going to avoid the railway pack and the defense pack because on its own the sector has not performed from the last budget and there has been the people are stuck in this space. So if we advise bottom fishing or maybe averaging that, it's not going to be a good trade setup as of now. Maybe the larger space where the banking such names, the way to the bank Nifty has performed, we would be betting more on the private banks like HDFC and ICICI Bank. It looks good on chart. Besides that, we can also look at the insurance company like ICICI Lombard, SBI Life. This kind of a stock can also give some great returns. Like, and from the technical point of view, also the stocks are corrected at good, and it's now approaching the demand zone. Besides that, L&T is something which we are keeping a focus on from the long-term perspective. L&T can be seen as a good buy from the as we spoke of the Lodha and the Oberoi Realty and the Godrej property. These are few stocks, selected stocks which are looking good in the realty space. Pharma, we already spoke and we said we can avoid as of now. Coal India is something which is very much close to the demand zone. So some good bounce and good investments can be done in the Coal India. We are liking tube investments and the BAIL, Bharat Electricals. So this can be one stock which can be kept on a watch list. Beside this, IRCTC, not very specifically one stock, though we are not advising the railway as a pack, but then IRCT is something which is will come to the very decent support level. So something like that, very individual stock specific approach can be kept where the fundamentals and technicals are strong, we can take a bet.
Okay, got that. So there you have it, expectations on the budget related stocks that you could really look at. Okay, lastly, before we let you go, Brijesh ji, preparation for tomorrow after looking at the kind of trade that we have seen today. Again, we may be inching closer or just closing right below 23,000, just another 2-3 minutes odd. What's the sense that you're getting? Of course, tomorrow will also be, key triggers will be playing out, will be inching closer to the expiry as well. What's your own sense?
Till now, if I look at the data point of view, if you look from the derivatives point of view, there has been a long build-up with the Nifty. So I think this is going to stay. Today, as of now, it's 153 points positive. We might not see the negative biases for sure. We might have a very flat closing, so it may be a breather for tomorrow's trading session. 22,800 is likely to be respected, is what I said earlier. So if this long build-up stays for the closing also, I think tomorrow will be sideways to positive market, not very aggressive. And in case of Bank Nifty, there was a short covering. So the short covering is likely to stay, and then I think Bank Nifty will make an attempt on the positive side as compared to Nifty. So bias will be sideways to positive, but it won't be seeing any negative bias.
Okay, got that. Brijesh ji, thank you so much for being with us in the closing edition of the markets today, helping us understand and how to navigate this current volatile market. Appreciate your presence with us on the channel. 22,977 viewers, we are 145 points higher, so definitely we're much better off than what we've seen in yesterday's trade, and we're definitely better off than last few trading sessions where we've been seeing consistent sell-off in the markets. The Nifty Bank definitely was the outperforming index today among major ones, 1.7% higher at 48,880 for the Nifty Bank, 825 points higher. At one point it was higher than over 1,000 points as well, and this is thanks to RBI's liquidity measures that have been taken in yesterday that's tried to cut down some of the impact of DeepSeek that we've been seeing on global markets and the ripple effects that were seen in the Indian markets as well as of yesterday and this morning too. So finally, we are seeing the banking space come back in fine fettle. Private banks up 1.6%, the Nifty Bank up 1.7% as well, PSU banks up 1.8% as well. So the PSU names also shot up in trade towards the latter half. Financial services also pulled up, with Bajaj Finance and Bajaj Finserv up nearly 4% each. So it was the Bajaj twins, it was Axis Bank, it was Shriram Finance, it was HDFC Bank, all of these heavyweights that contributed to the gains on the Nifty today. While on the lower side, Pharma took a back seat. Sun Pharma 4% lower at 1711. You had even FMCG names like Britannia dragging. Grasim Hindalco from the commodities basket also dragged a bit. So Pharma small caps and mid caps. You had consumer durables, FMCG, IT towards the end of the session slip into the green, in the red, but realty, financial services, PSU banks, private banks and autos. Clearly, the rate sensitive moves that actually saw a positive run after RBI's liquidity measures in trade today. So there you have it. The screen is frozen at 22,976. With that, at least some hopes of a rate cut also are being penciled in into the markets. Let's see how we progress and how we inch closer as far as the series expiry is concerned, and of course we will also see the budget by the end of this week. So as we see, inch closer, there are more and more expectations and anticipation that's rising high and riding hopes high as far as what the budget could bring in for the markets going forward. Stay tuned on to Business Today Television. We'll continue to get you fascinating insights around budget, around earnings, around markets, all on your screens. Welcome, you're watching Royal Ranthambore presents BT Golf. I'm Sakshi Batra and we are here at the Panchkula Golf Course, and with me we have incredible people joining in. While you make your guesses, I'm going to introduce the legendary Mr. Pargat Singh. He's been the captain of the Indian hockey team for how many years? I mean, like 10